Welcome back. Earlier this week, JP Morgan announced it would be acquiring the Irish fintech firm Global Shares, a software provider for managing employer share plans. The move adds to a buying spree of acquisitions the big bank has been making over the course of the past year. And for this and more, we're bringing into the stream Ben Hesse, JP Morgan Asset and Wealth Management Chief Operating Officer. Ben, thanks for joining us. Tell us, what was the opportunity seen in Global Shares and why was now the right time to make this move?
Yeah, good morning. Thanks for having me, Emily. So at our Investor Day in 2020, our CEO of Asset and Wealth Management, Mary Erdos, got in front of our shareholders and talked about, in addition to the strategies for accelerating our organic growth, talked about potentially doing inorganic growth as well. And we were really deliberate with that M&A message. We said it to our shareholders before that we were considering M&A. And one of the different categories that we said we would consider was adjacent capabilities. And so an adjacent capability is share plan administration, which is the core business of Global Shares. And so we had looked at probably 24 or so players in this space over the past 2 years. We really like the technology. We like the team. We like the culture at Global Shares. We spent a lot of time with their CEO, Tim Houston, and his team in Ireland, in London, over hundreds of Zoom calls and phone calls. And the deal just came together, and it's super exciting for all of us.
And to that point, what is the bigger end goal of these investments and acquisitions for JP Morgan in Global Shares as well as others? What strategically is the company trying to achieve that might not have been able to be achieved internally and organically?
Yeah, so everything we do at JP Morgan, we do for clients. And so when you think about this new capability, share plan administration, we have a lot of corporate clients, obviously, across the CIB and the commercial bank. Taking this capability to them is really exciting. And then also for the hundreds of thousands of current and future plan participants on the Global Shares platform, offering them access to what we think is best-in-class wealth management services from our 7,000 advisors across the Global Private Bank and U.S. Wealth Management. That's also exciting as well, for both Global Shares and for our clients.
Right. And of course, JP Morgan has been making a number of acquisitions recently, especially in fintech, financial technology. According to Bloomberg, 2021 was the most active year for purchases and taking stakes for your bank since at least the financial crisis. Do you see that same volume of deals taking place this year as well?
Yeah, so Jamie's been really vocal about this the last couple of years. If you listen to our earnings calls, if you read his 2020 annual letter, he talked about it in some detail. There's a whole section on it, and he actually had a table in there talking about the environment that the banks face on regulation and capital, and the environment that the fintechs face. And it's competitive. He's been really clear with that message, and also with the message that JP Morgan is going to compete. So we're hiring great talent, we're building great capabilities in-house. But we're also, when the opportunity presents itself and the fit is right, like I said before, we're open to M&A in this space. But I don't have a prediction on what the firm is going to do in 2022 in the space. I just say we are very, very focused on competing, as Jamie says.
And Ben, given where you stand, I do want to get your perspective on the broader markets right now. Earlier, strategist over at Goldman Sachs put out a note saying that global markets may be getting a little bit too relaxed about downside risks given the war in Ukraine. What do you think about this?
Yeah, so I haven't read that Goldman note, but I will say, before I took this job, I spent 14 years as a portfolio manager, and I had kind of a front row seat on a lot of different things in the market. So I started out with the housing bubble building in the mid-2000s, then the global financial crisis, the monetary response, the fiscal response, the regulatory response, then the European banking crisis in the early 2010s, the energy downturn in the mid-2010s, and then more recently when you actually had a Fed rate hiking cycle, which was pretty measured in the late 2010s. But what I never saw in all those years as an investor was inflation running well above the Fed's comfort zone, where it is now, and also having to navigate those markets in that type of environment. So there's some big questions that investors are facing right now, I think. How far are the central banks going to go? How fast are they going to go? What is the market response, the economy's response? Going to be from those policy moves? Those are big questions, and it's unprecedented time. And so I think there's going to be some choppy markets this year, and investors are going to have to navigate those.
So against this backdrop, with inflation running at 40-year highs, the Fed raising rates, energy prices where they are, and the geopolitical situation, where would you be investing right now?
Yeah, I think the opportunity for real assets is really exciting when you have inflation running like it is. And then, just sitting in cash, I think you have to question that strategy with inflation where it is. And so those are the type of conversations we're having with our research analysts and our portfolio managers, and all of our financial advisors are having every day with their clients.
All right, we'll leave it there for now. Ben Hesse is JP Morgan Asset and Wealth Management Chief Operating Officer, and we thank you again for your time.